full house today. Very interesting session to get started. So I think we'll get going. The session is about how do we strengthen the producer-consumer partnerships to take our whole gas economy to a different level. India has been at 5%, 5.5%, 6%. Aspiration has been 15%. And a lot of the challenges there that have been highlighted by all the clients that EY works with has been around how do we ensure more stability in price, more stability in supply chains and availability of gas. And in this regard, the most important factor is how do the producers and the consumers come together to really up the game in making this a much, much larger ecosystem through partnerships with each other. We've had sporadic partnerships. How do we make these strategic partnerships? For that, today, we have with us Mr. S.P. Singh, CEO of Adani Total. We have Patrick, Vice President, TotalEnergies. We have Mr. Anfor, Chief Resident Executive, Oil India Limited. We have Sanjay Ji, Director Marketing, GAIL. And we have Anil Ji, ED Gas, BPCL. So I think we'll get started with Sanjay Ji, with you. GAIL is not just a player for gas in the market. GAIL is also helping extend the ecosystem across the country for gas. And in this regard, you've been there for the longest time to expand this ecosystem to take us to a different level. Can you share what are the latest big initiatives we should expect to take the gas economy to the next level, and within that, examples of successful producer-consumer partnerships that is actually making that happen?
Thank you, Gaurav, for the opportunity. Thank you, DMG, also for calling me here. It's an afternoon session, and the effect of lunch, sometimes heavy lunch starts coming when you are here at 3 o'clock or something like that. I would try to be slightly, more engaging so that you don't fall asleep. See, the topic is producer-consumer partnership, and we have only one producer here. So these two are consumer. I think he's a producer, but in a domestic sense. SP is not exactly a producer, although he would like to be a part of Patrick. He is presently, in his present role, he is representing Dhamra terminal. So neither is GAIL a producer. We don't produce domestic gas. We've got lots of contract, but we don't exactly produce anything. So I take two parts of the pointing question that you have raised on me. The first part is that GAIL is actually an infra developer in the country, and we take pride in that role. Many companies have abandoned many projects. We have taken up most projects. In fact, we abandoned only one project, that too because of very extreme reasons. And we have completed them. We made sure that gas is available in parts of the country where, hitherto it was unimagined. And our projects team has done a wonderful job in completing those jobs. We are still working on many pipeline, and I'm quite sure we will make sure that, we are at least giving it a try to take the country from 7% to 15%. Coming back to the producer and consumer collaboration, we are living through very disturbing times, very confusing times. We wanted to collaborate with somebody, but then the contract, the seller stops performing the contract. That's in our understanding, our opinion. That's a caveat that I would like to have. They may have some other opinion. We would like to go for a copybook contract from a producer. If there is a seller of LNG, we would like to have a fixed type of contract where you get cargoes of 3.4 TBTU to 3.6 TBTU. But nowadays, all the sellers are trying to sell to different people cargoes which can come from 2.9 TBTU to 4.1 TBTU. I hope I'm not being very technical here. I hope you are understanding what I'm telling. These are standard contracts which are being offered today by sellers. They would like to take advantage of possible lower price in the market and supply more LNG to the consumer like us. or they would like to supply lower quantity of the cargo volume if the price elsewhere is higher. So, though we wish for producer-consumer partnership, but in my opinion, these are few things that if we have good kind of contract relationship, if there is, lot of thought put into this, no flexibility should be used for commercial purpose. That's my thought on this.
No, I think that's a very clear and direct question. Sellers need to make something happen. Buyers, consumers are here waiting for it. Patrick, I think on that note, it'll be useful to get your perspective on two aspects. Aspect one, Total is one of the biggest globally in the space. So how is Total thinking at a global level to really make this whole gas economy build up, especially on the supply chain, on the producer-consumer partnerships? Second, to have your view on the direct question that Sanjay ji has put up. We are here waiting. Why is the fixed price contracts not happening? Or what needs to be done to really make this happen? Patrick.
So thanks again for inviting me at this panel. I'm impressed by the organization, so congratulations to all. Yes, back to this LNG industry. This LNG industry actually is turning more than ever global. It was not possibly conscious before, but I mean, nobody, as an example, because I like using example, nobody would have anticipated a few years ago that a strike in Australia would have had an impact on the price of the European gas hub, that is TTF in Europe. So this illustration to show that I think the partnership between the customer and producers is key, and this, I would say, sustainability and resilience of this partnership is has to go through, I would say, liquidity of the market. So liquidity of the market that you can value through different criteria. The first is the one concerning the volumes. When a market is turning global, more volumes brings more transparency on the price, more capability for the customers and the producers to benefit from the market. So it is the key feature. Another one, it's the price discovery. It's what we were saying, more you have volumes, more liquidity is in the market, and more you are preserved from a volatility. Because a volatility, either you're talking like in the previous years of $2 or $3 per MMBTU, or up to $100 per MMBTU. I think that these extreme situations are not benefiting to anyone. Because again, what should be the mantra of our LNG industry is LNG is clean, LNG has to be reliable as a source, LNG has to be affordable in terms of price, and I insist on this liquidity of the market that can bring all this volume produced. And also the last, the sustainability of this resource. So definitely, I mean, all these features of this LNG commodity market can benefit for both on the long term to the customers and to the producers in an equal way.
Thank you, Patrick. So clearly, Patrick has brought in an important point that LNG is clean, LNG is sustainable. Clearly, from oil and coal moving towards gas and moving towards transition, the whole conference in India Energy Week has been about how do we manage this transition. But before we go there, just to come back for a minute, SP to you, you are right in the middle of making this happen between the producers and the global majors like Total and the big majors who are running the market in India like Adani Group. You're actually getting the supply chain set up, you're making those deals happen to bring LNG at the right prices to India with likes of Sanjay. What are your perspectives on both aspects? We've talked about price a little bit, but first, if you can take your view on the supply chains to really allow India to bring in that much gas and LNG to India. And then secondly, your view on price. Because I'm sure you will be discussing price deals later with Patrick as well. So thoughts? And then we'll come back.
Yeah. Thank you, Gaurav, and thank you, DMG. I think it's a wonderful platform to have such a rich conversation. As you can imagine, I have a few opinions in this matter.
I'm sure.
And let me just sort of unpick this for you. You're quite right. It's been a fascinating a few years for us, not just in delivering Dhamra LNG, but also in collaboration with TotalEnergies, bringing LNG via the Dahej into India and marketing gas. What I will say is there are 2 or 3 themes. India uses nearly half of the gas that it consumes in the form of LNG, which is by definition imported. And given the share of gas is expected to grow rather steeply in the years ahead in our march towards climate neutrality, the role of LNG, given that domestic gas production is largely plateauing, cannot be overemphasized. India will remain increasingly reliant on LNG in the decades to come. I think given how fundamental, therefore, this point is, we cannot just be tactical in how we look at LNG. We have to have a very strategic approach to how we participate in LNG, in the whole LNG bouquet. And what we have seen many other countries do, for example, China, is Chinese companies like PetroChina, etc., which were large importers and consumers of LNG, we have seen them over the years move upstream, and they have farmed into upstream producing assets. I personally think the time is right for Indian companies to do more deals like the deals that GAIL have done, like the deals that ONGC and BPCL have done globally in farming into upstream assets, because that is one way of acting as a natural hedge against the inevitable volatility you're going to have in prices. So having producers become closer to consumers, having consumers become closer to producers will act as a natural hedge in what is a collective objective of minimizing uncertainty and volatility. And I'm sure GAIL can give us very rich examples from their experience in taking up capacity in US projects. So I think that is my first aspect, that I do imagine that Indian companies and Indian stakeholders will look increasingly to farm into upstream opportunities internationally in their quest to get better manage their exposure. The second thing is having companies like Total participate actively in the downstream market in a country like India actually also gives them an opportunity to better understand what are our pain points as a country. You know, we are, for better or for worse, a very price-sensitive market. And I think what our experience has been in buying LNG in the last few years is that experience allows suppliers to tailor-make their bouquet of supply offerings, with giving full cognizance to the constraints that we have. We therefore, you know, for me, some of the things that could be done, for instance, is having contracts that limit price volatility, whether you have S-shaped contracts or you have reopeners in the contract should prices go beyond a point, or should you have some events which disrupt supply chains. All of these factors will have to be considered. And in my opinion, when I think of producers and consumers coming together, it is really a two-way street. I don't think consumers can just sit back and say we are waiting for the producers to do something, and the producers cannot just impose their will on a market like India. I think both sides have to walk towards each other to create win-wins. Thank you.
Thank you, SP. A very interesting take that SP has taken is that producers coming further downstream, like Total has with Adani and looking at gas distribution, and marketeers going further upstream, as GAIL has gone and invested in the US, and so has BPCL. And I'll come to you, Anil, for a minute now, which allows both sides to understand each other's perspectives. There is a clear need to accelerate this because the journey from 515 is taking very long. But I think let's take further view on this from Anil you on how BPCL is going on this journey and your thoughts on the topic.
Thank you, Gaurav, and thank you, DMG Events. I think some of you at least must be wondering what the second largest oil marketing company is doing in this panel. So let me explain. See, we started off way back in 1998. We started our journey into gas. So we have partnered with GAIL. Sanjay. It was special mention to Sanjay. We started as a partner in IGL. We had a joint venture with IGL, whom he was chairing before he took over. So that's our journey start. So that was into the CGD space. Later on, mid of 2000, we also on a JV road came into regasification, PLL. It's a subsidiary of ours. And thereafter, we started into bulk marketing. And our further journey into gas was always on JVs. So we had one CGD. CGD is a growing phase in India, of course. So any talk about 6 to 15 always lands on the major growth as the CGD sector in India. So from there we started building on with our JV in securing CGDs, and we have secured 25 CGDs along with our JV partners. Afterwards, we said, okay, we have gained in confidence in this market, and we started venturing on CGD business ourselves. Today, we have 25 CGDs on our own, and put together, we are 50 CGDs with our JV. We touch around 19% of Indian population. We are in 105 districts. So that's the journey what we've taken in the side of marketing. And of course, we have captive consumption. A couple of our refineries are some of the biggest consumers of gas in the country. So it gives us a lot of strength or opportunity for us to get into gas. So we have partnered with GAIL. Then we also have a partnership with Total. We have a 10% equity in Mozambique, where Total is the operator. So that one of the largest find of late that's restarting probably a month or so. It's restarting, and the gas is expected in India by 28. We also have some market tie-ups, long-term tie-ups, gas with that. So that takes care of. That's another partnership. We are also expected to partner with oil. In the latest round, we have bid along with oil as a consortium partner, likely to win some GAs, and then probably we'll have a partnership with them. That leaves Singh Saab. For some of you who may not know, his father is a legend in BPCL. so we sort of, that's the connect.
He's partnering all of us.
Yes.
Yeah. So
Perfect collaboration.
of course,
Absolutely.
and ENY is our knowledge partner. So we have.
Yes.
So
That's the
that's the so we are betting in a big way in gas. So see, our growth pillars for the future, gas is predominant. Our investment probably over the next 25 years is close to 48,000 crores of rupees in gas. Yeah.
Thank you, Anil. Anfor ji, if we can come to you, as Sanjay ji mentioned right in the beginning, you are the only producer, so to say, on this panel. And in fact, you are a key producer for gas in the country. Across the Northeast, where oil was first found at the ages ago. Your perspectives, one on domestic production of gas, second, how you believe the gas economy and the producer-consumer partnership can be taken to the next level, at a national level or at least even at the Northeast level, given the so much gas trapped there.
Thank you very much, Gaurav. First, I thank IUW to bringing up the relevant topics in the present day context. And I also thank to be a part of this as a panelist. Sorry. I'm representing Oil India Limited, an E&P company. Rather, we'd like to be called as a energy company. And producing oil and gas in the Northeast and in Rajasthan. Our company is presently producing about 3.5 BCM per annum of gas, and it is more likely to go up in the years to come because we have a huge potential of gas, but due to certain reasons, due to withdrawal pattern, we are limiting our production to a certain level. We are supplying gas to refineries, to the petrochemicals, to the power sector, and also tea gardens. They are the major consumer in the Northeast, and the city gas also. I'm very delighted to see that all the representatives from the core sector, if I break it in three sectors, upstream, downstream, and the mid sector, and all the representatives are here for this panel discussion. And I hope that with this discussion, many good things will definitely come out. Before going to the collaborative approach and collaborative success, we should understand what is the major concern at this point of time between the producer and the customers. That issues and concern has to be dealt properly. Then we can have a better relationship, better coordination. And out of this, in Northeast, as a Oil India, in the absence of connectivity to the main gas grid and the conversion to the CNG and LNG, we don't have any other option but to supply in a natural gas in that form. And in such case, there was a fluctuation, seasonal fluctuation that we are facing. This is the most relevant in the case of tea gardens. In the winter, there is hardly any gas that will be consumed by the tea gardens. But I already mentioned that they are the major consumer for our natural gas. Secondly, even with the major companies, when they are going for shutdown of the equipment, or even for the plan, even non-plan also, we don't have any option but to close down the wells. And if I go to the details of the close as a producer, shutting of the wells frequently and opening of the wells, shutting and opening of the wells frequently, it has a very adverse effect to the health of the well. And this is a very, very prominent in our case. This is a one major issue that we have understand. And another is that this collaborative approach is required between the producer, transporter also, and also the end user. And building up an infrastructure development project where everybody can join hands and reduce the risks of business. That is the main concern. And another way of improving this partnership between the collaboration between producer and customers is that we have to invest in certain sectors, certain industries. As a producer, we have to uh, collaborate on that issue to building up big structure. So in that case, it will be a win-win situation for both producer and for the consumer also.
Thank you, Anfor ji. So essentially, the producer is welcoming with open hands. Don't make us shut our wells. Allow consistent supply. We're there to supply the gas. If I can come back to you, Sanjay ji, you raised the question on pricing and around fixed price. And I don't know whether on this forum and on such limited time, whether we'll be able to answer the full pricing question. But your thoughts on the price that we receive from global, and then how does GAIL look at ensuring a little more consistent build-up of pricing in the India environment, which then can lead to better producer-consumer collaboration. Secondly, your big role is also around infrastructure development, as you said. And that is where this collaboration becomes truly important, that someone at the center comes in and pushes this up, and then the economy takes a leap. So, quick thoughts on those aspects from an Indian economy perspective.
If, before, what happens when there is a natural thought process, before you collaborate, you try to find reason to like a proposal, isn't it? First thing is that you should be okay with something that my so-and-so colleague is telling, that I want to build this pipeline, although I know there is only 1 million cubic meter per day demand, but still I want to build it. He will give you some proposal. So the pricing is one such thing which is very important in a producer-consumer collaboration.
Yes.
I did not go into the, if you go into the hardware and software, I would rather limit myself at hardware. Pricing is one stuff which affects any transaction. If you are trying to today sell me a cargo at $6 when the market is at $10, then you become a good seller for me. Possibly I'm not a good buyer for you, but tomorrow, if that formula suppose yields the price of $15 and I perform that contract as a buyer, I don't come out with some contractual issues and say that this is a force majeure or this is some other situation, then I'm a good buyer. So effectively, pricing is one such thing which helps build up the collaboration. And in most cases, people always try to take advantage. Whenever you go, whenever there is a relationship, they would like to use the contract to their benefit. As consumer, in most cases, we are suffering. Whenever the market is more than $10, then there is some other kind of cargo loads which are coming. Whenever the market is below $5-6, some other kind of cargo loads are coming. But the collaboration has definitely many other aspects. Recently, some of you may be knowing, we had done a ship-to-ship transaction. We did not repeat that. That STS operation saved 7,000 tons of CO2 emission. We loaded a ship and released that ship in Gibraltar. It did not need to come to India. It was coming from USA. And the other ship which was coming ballast, the Qatari ship, that we loaded at Gibraltar through STS and we brought it to our Dahej terminal. So if there is a kind of, des transaction or a kind of seller producer which has got scope for these kind of transactions, which will in future use more and more ballast ships for loading cargoes, which will help reduce the carbon emissions, it will definitely be a step in the right direction. By 2030, all the consumers, all the producers will start feeling the pressure of net zero. Already carbon tax is applicable. The ships will have to pay certain, carbon tax. Although today on an LNG ship going into Europe, the amount may be limited to $10,000-15,000. But very soon this can become $50,000, $70,000, $1 lakh also. These are very important aspects, and there is real need for the producer And in producer, I'm including the sellers also. If producer and sellers combine and they work with consumer, we can work towards controlling emissions. We can work towards a sustained offtake of gas, which all of us agree is a transition fuel. It is not. We all know that by 2100 a year, gas may be very limited in its role. At least its uses may not be there in many sectors that we are presently looking at. I referred to this contractual flexibility. Actually, it's a very important aspect. Any contract between a seller and a consumer or a producer and a consumer should be totally based on, any flexibility that is being used should be totally based on operational requirement. There are some flexibilities in the contract. And SP would definitely agree. He had such a large, tenure at Shell. Patrick is there. There are, we are writing in contract some terms like the volume can be plus minus 5%. But if you put in every cargo plus 5%, then the buyer suffers. So those kind of issues should not be used for the purpose of commercial gain. That was the point I wanted to make.
So thank you for that, Sanjay ji. Before we move further, I also want your second perspective, which is that, see, price movements, contracting will keep happening. That's part and parcel. But if the infrastructure is not there for 15% gas economy, we will never get there. And for any sector which needs to grow, the upfront infra growth development needs to happen, irrespective of price discovery and price development. Quick thoughts on that, and then we'll come back.
So there are two aspects to this. The upstream, I would limit myself to Indian
Sure.
market, because we all know that by 2030, 2035, maybe in the world we will have some 900 or 700 million tons per annum capacity. Today's volume is about 400 million tons per annum. So there will be sufficient gas that should not be a problem. With net zero coming, this gas may be more than sufficient, because some sort of shifting pattern will be there between the consuming countries. If you look at India, today we are about 50 million tons, 45 to 50 million tons of regas capacity. Lots of blocks are going to produce gas. Domestic gas production has gone up in last few years. We expect it to go, even to 150 million. Now, to carry this gas, we will need pipelines. So arterial pipelines, the cross-country pipelines are being made by different companies. My company has very large role in that. There are other companies also which are doing some job in that. But at the end of those pipelines, you need the so-called consumer. You need somebody who will take the consumption of gas in the country from 185 million cubic meter per day to 500 million cubic meter per day, or 400 million cubic meter per day, or whatever it is. Let it be 350 million cubic meter per day. So for that, the PNGRB, the regulator in the country, they have already, I think they have awarded all the geographical areas. The last ones, my friend here to my left may have won many of them in Northeast, and that will be some 308 geographical areas. So that is the actual push that will come to this thing. In infrastructure, in the respect of infrastructure, I think the country is fully prepared. On all cylinders, whether it is regas terminal, whether it is the pipeline, or the final retail consumption by way of CNG, PNG, or any other industrial and commercial use, etc. I think that makes
Understood.
the point.
So the primary infrastructure is already there for us to last us for a few years, but the consumer side needs to pick up.
Real push will come from the downstream, the last consumer on the street. Some of us, I sell 100 million cubic meter of gas per day.
Yeah.
I mean GAIL. But I consume only 5 million. So 95 million cubic meter of gas per day is being sold to somebody. I'm basically a trading and marketing company. And when you look at some other companies, they may be large consumer also, especially some refiners in the country. While they
Sure.
may be selling 30 million cubic meter, 20 million cubic meter, a lot of it is their own consumption. So I need to be very careful about this collaboration, because I am the person, GAIL is the company which is largely to benefit out of that. So we wish, this is the primary wish list that we have. Infrastructure as well as the producer-consumer collaboration, as well as people like SP who are giving us good service in the terminal at Dhamra.
Thank you. So,
Could I come
SP,
back on the
yes.
price sensitivity? Because I think it's key on the Indian market that actually this is the demand is very price sensitive. So what I would like to highlight today is you can address this sensitivity through something that in trading we are very familiar with, which is the risk management. So I mean, either as a consumer or either as a producer, if you have either a volume to produce and to market or a volume in the frame of your procurement, what I would advise is that in good risk management, you should split your volumes between a long-term aspect, a mid-term one, and the spot. So I was having, of course, today some meetings, and it was striking in a sense for few counterparts that are actually already in this mode of risk management, meaning that they are buying for 1/3 of their volume on the long term, 1/3 on the mid-term, and 1/3 on the spot. And it's pretty important to have a kind of resilience versus the market, versus its volatility, to protect both, I would say, the producer from a $2.5 per MMBTU and from a consumer from the $70 per MMBTU. That's the first part of this price sensitivity. The second, I would say, just to add, it's the pricing of it. Because, I mean, there was a paradigm before where everything was priced on the slope of Brent. And now we have, a decoupling of the market in a sense where LNG players can buy on HH, can buy on a hybrid formula, can buy on Brent only. But I mean, this diversity is also a solution to be protected against this sensitivity.
Sure. Thank you, Patrick. Clearly, we need to have a good mix of long-term. Yes.
Yeah. In regard to collaboration effort, and one good example I would like to cite here, Indradhanush Gas Grid Limited. It is a northeast-based gas joint venture. It is a joint venture between 5 PSUs, that is IOCL, ONGCL, GAIL, NRL, and Oil India Limited. And the best part of this thing is that they are responsible for the energy security of the Northeast and all the Northeast states of the country. And moreover, since it is a collaborative effort, the risk factor and the price flexibility that can be consumed by this kind of an effort. Secondly, also oil is also investing in CGD companies where we are investing in the both way. That means we are the producer also. At the same time, we are for the consumer also. That way, we can have a balance on the price equilibrium. And moreover, since the price of gas, if I consider it is a sector-wise effect on the whole value chain system. If there is an increase in gas price, if there is a decrease in gas price, maybe in the downstream there is an adverse effect. But at the same time, midstream or the downstream will be benefited by this impact. So if I have a collaborative effect and combining it, the integrated combined company like can create a company, then in such case that impact can be neutralized and the equilibrium can be maintained.
Absolutely.
Along the gas value chain, I agree.
No, that's a great example that you've given of Indradhanush Gas. SP, if I can come back to you. From Adani Group per se perspective, you are, so to say, the producer bringing the gas in. You also have the tie-in with ATGL, which is distributing gas and growing very, very rapidly. The question that Sanjay had posed, that how do we make sure that there's enough consumption or consumers offtake? How are you tying up internally on this producer-consumer relationship within the group itself to really make this happen? Any thoughts on that?
Yeah. So again, and before I answer that question, I do want to, I feel quite strongly about this, that the market is the market. You know,
Yeah.
I mean, much as we like to, as a consumer, I wish that the market would, or the producer would not want to seek flexibility. I wish, in fact, all the flexibility was available for me. You know, but at the end of the day, the market does what the market does. We have to respect the fact that there are demand supply forces at work. Therefore, I wish to reiterate the point that I made originally, that, you know, to manage our exposure, one of the things that at a country level, and I do welcome the suggestion made of having a sort of a buyer-like OPEC system in place for gas, you know, which is roughly how I understood the comment. I welcome that. And I think we have to look at ways to hedge ourselves from the market forces that will always create the Ukraines, that will always create the Red Sea blockade, that will always throw up the Australian strikes. And that's going to continue. And we're going to have to really try and insulate ourselves from by being in the other side of the fence as well. So I think that I just want to reiterate that point, because I think it's very important. The second thing that you mentioned is, you know, we've had a successful relationship with our sister company ATGL in supplying them with LNG. And one of the ways that we've done that is by being able to offer them exactly the kind of flexibility that was being referred to. You know, for me, flexibility, whether it is operational or commercial, is a necessary part of making a deal work. Because LNG is not a pure commodity, it is not available as freely as oil is, you're going to have to deal with pretty bespoke bouquet kind of deals, which are will have their own nuances. We cannot expect customer A to buy the same terms as customer B, and there is no one size that fits all. So our relationship with ATGL has been largely part of a value chain. We've been very ably supported by TotalEnergies in that, in being able to actually pass on some of the flexibility, which is both operational and commercial, in enabling ATGL to offtake volumes and address the particular nuances of the CGD market in the country. So, you know, COVID was a great example when we ran into a force majeure-like situation, and we had to take rather extreme steps in actually managing demand and managing supply obligations. So I think, all in all, there's no hocus pocus really. It is about being able to be extremely connected, not just to your buyer, but also to your supplier, in fact, across the value chain, in understanding what are the constraints and which constraints are most easily mitigated by yourselves, and the ones that you cannot mitigate, well, you just have to accept them, and maybe the mitigation lies in doing things which are not just purely operational. So, you know, I think we have become a rather sophisticated buyer from the early years of 2002-3, when nobody really knew what LNG was in India. We are today the world's fourth largest LNG importer. And I think there's a big responsibility that we must assume as a nation in recognition of that role and being very prudent in the choices we make.
Thank you, SP. We'll come to audience questions now, but before that, one last perspective from you, Anilji. BPCL is one of the biggest fuel marketers in the country. Selling MSHST is bread and butter. When this started, MSHST, years and years ago, there must have been some learnings that can be taken from fuel marketing into gas marketing to really build this up. The constraint around consumer. Even for example, LNG for trucks. the collaboration that you have and setting up with auto OEMs. Are there any such initiatives from broader fuel marketing perspective that you think we can cross leverage to build this up?
Yeah, just before going to that, I would just like to add.
And then we'll come to the
yeah.
audience Q&A. If you can pass the mic around, please.
Add on to whatever was said. See, the largest LNG contract of the country is a typical example of collaboration. See, many of the marketing companies, came together and under a G2G initiative that was signed, and back to back, with hardly any margins, the consumers were aggregated. So now what we see in the LNG market, it's not only the producer, not only the supplier, there are other important components in between. Somebody has to break the bulk. So there we come to the marketing companies,
Yeah.
and there we come to the portfolio players. So that's a very important part. See, if you have a very developed country like US where the regulations have been active, then you don't really require this. But as at this stage, wherever domestic consumption, domestic production is not really getting into any of these markets, actually reserved, LNG, this role of breaking the bulk is very important. Now coming back to your question, see, we believe to be the energy providers to the transportation segment. So we have tuned ourselves to that. When LNG came, so we as an oil marketing companies, we came up, okay, and the space. How do we create transport sector? It's very, very important that we create infrastructure. The best way to create infrastructure is to extend the same or add the same to the existing retail outlets. The 6,000 odd outlets which has come up, I'm sure 90% of that would have come up in the oil marketing company outlet. So we are giving the thrust. When it comes to the next mode of energy, even the charging infrastructure we are putting up. Today, for us, see, we still remember when IGL started, the investments what we made, virtually there was no return. The outlets were empty, there was hardly anything. So, but that phase will go. So we are making those future investments today, whether it is conversion of the trucks to LNG, providing the LNG facilities along the Golden Quadrilateral, all that we are teaming up and creating that infrastructure which is available so the users can come in.
Yes.
So the thrust is like CGD, the thrust is invest, create infrastructure so demand will come.
Create the supply, demand will come.
I agree.
I think there's a strong common agreement on that. With this, we'll seek audience questions. Please, any questions? Before the session started, I had promised the panelists that the audience has been very engaging. Lots of question answers are happening. So I'm hoping there will be one or two.
It was so engaging that there are no questions.
Yeah, or I'm fearing Sanjay ji's comment about the graveyard shift after lunch is going to be proven right.
Yes, I think we have the first one right there. First one is always the most difficult to put up. Please.
Microphone is not working.
Yes, it's
Okay,
working.
got it. Good afternoon. So I wanted to ask the panel, so what is happening is that natural gas has, it is very clean fuel. So, but it is, and of course it is efficient and it is a fuel which is safer also. And it results in almost 30% reduction in CO2 emission. But it is not getting its due. So when you go to a customer, they compare it with other fuels on the basis of price. So how that can be captured? What are some inputs on that?
Can I take that?
Please.
Yeah.
Yes.
See, natural gas, if you look at, it has been described in many ways. The first thing, when we started, it said fossil fuel. So fossil fuel, no investment. Banks don't support. Then later on, energy crisis, transition fuel, because what you rightly said, is the lowest carbon emission for any fossil fuel. So it happened. Now, you know what has happened, Russia, Ukraine. All of a sudden, the requirement of LNG shot up through the roof. We never had anything connected to that. We had our turmoil. So probably people have now started talking, is it the destination fuel? Okay, that's one part. So along with that, how does this convert into pricing? So anything, see, the sustainability has a price. If you look at Europe, today they've started something called CABM. It is CBAM, Carbon Boundary Adjustment Mechanism. So if you have to import steel to Europe, they will take your carbon intensity and put a pricing penalty for your product to come. So that's happening. So the carbon as a load is happening today, and today the exporters to Europe are looking at alternatives. So this this plus natural gas plus electric arc furnace can give them that fillip towards that. So it is one part. One part is okay. What I said, you need the infrastructure, but then also we need support. That little, there are many fuels where this is competitive, but other fuels will require some sort of a support from the governments, the CO2 taxation and all that.
Can I just add that we all need to become advocates for natural gas, and it's not an easy job. I personally, one of the things that I try to dispel is in fact LNG and gas being referred to as a transition fuel or a bridge fuel. Because my common retort back to the public is that, you know, if I tell you that it's a bridge which is going to be there for 30 years, will you stop calling it a bridge? Because that's how long gas is going to play a very big role in this country for. So one of the myths that needs to be dispelled is that we're going to suddenly magically wish away fossil fuels. And as long as our future is inextricably linked to fossil fuels, the best bet that we have today in managing climate neutrality is to move to gas. I think it starts with that for me.
No, absolutely, SP. I think we have a question here and then a question there. Yes.
Hello, thank you, esteemed panelists, for this lovely session. I'm Sagar from JP Morgan and an investor. In the course of the last 3 days, what I've learned is that India is really trying to push to increase the gas in the energy mix from 6% to 15%. But in reality, what I gather is the talks have been on for almost a decade. What will really push in the next 6 years that such an aggressive target will be met? I understand pipeline construction is one of the things, but apart from that, is there anything from the government in terms of policy making that is pending that you think can help the gas sector? And also, just to follow up on Mr. SP's comment on the gas as a bridge fuel, specifically for LNG regasification facilities, the reality is that there's also a lot of push on renewables. If the bridge is, say, 30 years, do you worry that may shorten in terms of period or length, given that renewables is also getting the push that it deserves? Thank you.
Thank you. Maybe Sanjay and SP, if I can ask you to comment.
Okay.
Would you like to comment on
About the 6 to 15%, we all know that the taxation is not very conducive for gas. If somebody is using LPG or fuel oil, he gets GST. I hope I'm correct.
Yeah,
Right?
you're
It
right.
still continues to be that ITC on
Yes.
GST input tax credit. But gas has not got the best, tax treatment. Other than that, there are no problems. We are working on all front. If the prices are good, we can actually take a hit at double digit of primary energy mix. May not be 15%. We understand that there is hardly any, it's not that 2030 is very far away. But we can take an aim at that. It has the step motherly treatment that gas is getting on the taxation front should be, it should get addressed very soon. And secondly, the kind of positive image that gas should get, because one of my colleagues said that it is having 30% less emissions. I did not answer his question, Otherwise, it would have looked like match fixing. He's my colleague actually. But he said that there is 30% less emission.
Yes.
So that kind of value does not get ascribed to gas. These are two aspects that we need to this thing.
I just want to put one line here. As a responsible citizen or as a between the fossil fuel to the renewable, the gas is the transition fuel. We have to agree, and for that, there is no other alternative left for us.
See, I'd also like to say that, it is incumbent on us to become a lot more sophisticated as buyers. I think gas is unlike oil. It has its own challenges in terms of infrastructure creation, and handling is not as easy as oil. Now, you may have heard this too many times, so you may take my comment with a pinch of salt, but having seen the way GAIL has performed in the last 7 years in terms of developing pipeline infrastructure, they've just done a fantastic job developing the entire grid on the eastern part of the country. I like to believe we are now at an inflection point. The rate at which gas pipelines are being developed in India at present is unprecedented. So I do believe that the future is very robust. And whether LNG is going to be around for 30 years, 40 years, 20 years, you know what? 20 years in itself is a long enough time.
Yeah.
And unless you start planning on a long-term basis, you'll never fulfill the objective that gas has in our march towards net zero.
I think we are on the hour. Maybe quick question if we can. Yes.
So I just wanted to get your sense. Sorry, just want to get your sense on the impact of the Red Sea disruptions on the global LNG market, and also another specific question to Patrick about any update we have on the Arctic 2 and Mozambique projects as well. Would be great.
Arctic 2.
Arctic 2, difficult question.
But there is no comment about this.
What is the first part of the question?
Sorry?
Global disruption.
Red Sea disruption.
Well,
Okay,
I can tell you that, and Sanjay, you can perhaps corroborate, but I think the Indian market or the global LNG suppliers have been remarkably resilient. I think it is testament to the kind of infrastructure that has been created, that despite now having to go through the Cape of Good Hope, in general, I'm not hearing about shipments getting delayed, and whatever additional shipping costs there have been. My understanding is that suppliers are accommodating this cost within their supply contract. And again, it's a testament to how reliably the LNG industry has performed over the years. So I don't think there has been any material disruption, though my colleagues can correct me.
No,
I mean, if
that's
I
a
may-
very
if I
good
may-
example of the collaboration. What you said in the end, that the sellers are accommodating shipping through Cape of Good Hope also within the same price.
What we can say is that having a cargo loading in the US, if you go to Asia and not going through Suez, actually it's just adding something like 2 or 3 days of sailing. So we cannot say that there is any perturbation of the global market due to this temporary, we hope, situation.
Thank you for that. Just as a closing note, so on a personal note, my daughter in her school has a competition which is called Model UN. And in that, they need to discuss global topics. And this whole transition, gas, all of that came up in a recent competition for her. So while she was preparing her speech, she asked me that, Papa, will you do oil and gas for a living? Will you have a job by the time I grow old? And I had to think for 30 seconds before I answer that, because that's direct and personal. My answer, frankly, was, as SP said some time ago, I need to propagate and I need to transition myself as an energy advisor. And I think so do all of us in the room. And in that, gas will have an important role, and we move towards renewables and everything beyond that. Thank you so much for your time.
Gaurav,
Well said,
you,
well said.
you will become another kind of energy advisor. Think of us, 4 decades in gas.
Too
and
much
LNG,
competition.
and 90% of the people sitting in, except Nidhi sitting here,
Yes.
all of us are probably energy, professionals. So they will also change profession. You will also change profession. We will be, without job.
But
We
Sanjay,
will be
Sanjay,
fossilized by then, I think, so it's okay.
I'm sure.
Sanjay, we are more dated than you. We are more dated than you.
It will be the law of the supply and demand.
Thank you for your time. Thank you, everyone. Thanks for being an engaging audience.